Yeah, it's really important that we continue action. We had an extraordinary amount of support. Over the last 2 months, over $1 trillion went out. That was more than any given year in the financial crisis. So this is something that protected us from seeing an even larger second wave recession as the people that got shut out of their jobs didn't have to cut back on their spending nearly as much as they would have otherwise.
Krishna, what's your take on those numbers this morning, and how positive can we be on them?
No question, it was an absolute blowout, a month of job gains. And starting from 11% unemployment, today, I think we need to take a fresh look at our end-of-year unemployment forecast. Consensus probably needs to come down a bit. So all good news on that front. But across May and June taken together, we've won back 1/3 of the jobs that we lost in March and April. There's still around 15 million fewer people in work in June than was the case in February. So we've still got a big hole to dig out of. And of course, the big question is, can that momentum in June be sustained in July and August, given in particular the adverse developments in terms of the resurgent virus, but also, as Jason points out, the risk that some of this fiscal support may not be extended, or at least may not be extended in full in the months ahead. It's critically important that there is still powerful fiscal support.
Yeah, Jason, to that point, I mean, can we sustain the momentum? Say you do get a phase 4 in terms of fiscal stimulus at the end of this month, which I think there is an expectation, at least baked into market, that we do. Of course, the devil's in the details. But what does this recovery ultimately end up looking like? I mean, so far, based on the data we have gotten in the last couple of months, it has been more V-shaped. But is that sustainable?
Yeah, there's basically two downturns going on. One is all the people who were effectively locked out of their jobs, and that's gotten much better. As you see, the number of people on temporary layoff has fallen from 18 million to 11 million. At the same time, there's another recession, people that have permanently lost their jobs. That's actually gotten a little bit worse. It's gone from 5 million people to 8 million people in June. And what we have to worry about is the reopening is a really fast and easy process. But there's a lot of people that will never be reconnected to their jobs. A lot of employers will use this as an opportunity to downsize. And so progress after that, even with a robust rescue package, I think will get a lot slower than what we've seen so far.
Jason, I also rose the topic with the Vice President about mask wearing. And while the tone has changed fractionally from the top of the administration in the last couple of days, sort of not criticizing wearing of a mask, if you will, clearly we don't have a national mandate for one at the moment. Do you think we will live to regret that? Goldman Sachs said this week it could make a 5% difference to GDP if it does prevent the need for pausing of economic reopenings.
Yeah, I mean, a fiscal stimulus plan that would have incredibly high bang for the buck would be for the government to print up masks. They could say thank you, Donald Trump, on them and mail them out to every American and tell every American to wear them. It's really not hard. And, there's not a lot monetary or fiscal policy can do in the face of an out of control virus. A mask is one of the steps that can control that virus.
All right, we're going to leave the conversation there, gentlemen. Thanks for joining us on this Thursday afternoon. Krishna Guha and Jason Furman.
Thank you.